The following is a presentation of TFNN. Live at TFNN, the Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks, to the Money Masters Show. Steve Rhodes here. Tom is out buying real estate. It is Real Estate Mondays, for goodness sakes. And if you haven't had a chance yet, folks, go to the homepage of TFNN.com. You'll see the white paper that Tom did, the Florida bull market in housing out there. And download that paper. A lot of great information to glean if you've got an interest in the real estate market, putting some of your capital to work. And I would suggest you take a look at your long-term capital, your retirement funds out there. You want to take good money and you want to buy things low and sell high, and real estate market is the place to do it. You can always go ahead and get in touch with Kathleen at TFNN.com. Over on the right-hand side of the homepage of TFNN, you will also see a banner for the Tiger Real Estate Opportunity Fund. And, you know, I didn't mention this in the first hour. Kind of regrets for doing that. We do have the Salvation Army Tiger Dollars program in play. All of you that are subscribers to TFNN services, you most definitely want to go over and take advantage of buying some Tiger Dollars that can be used really for everything here at TFNN, whether it's courses that are put together. Basil's got a live workshop this Thursday and Friday. That would be a great way to put some money to use. Could be newsletter services like myself, Mastering Probability, whatever. If you do use TFNN services, for $1,000 or less, you'll get a 5% donation, I should say, to the Salvation Army in your name. You'll get a letter from the Salvation Army, and it's tax deductible, $1,000 or more in Tiger Dollars, and 10% donated. Folks, that gives you you're getting also, on top of those donations, you're also getting a 25% bonus thrown in there. So it is just really a great way to maximize your dollar. As we take a look at the markets here, market's relatively flat right now. The Dow just turned negative by about a point. S&P is up by 2 points. Composite hanging in there, up 7 points, mostly because if you take a look at leading the charge to the upside, dollar-wise, you've got Priceline is up $9.68, Apple up $4 and change, MasterCard up $3 and change, Google up a couple of bucks. So you got 3 or 4 heavy hitters. Well, Wynn Resorts is up as well. So you got some of the heavy hitters out there inside the NDX 100. Still green out there. If you did miss the first hour of the Trader's Edge show, one of the things that we are taking a look at today for a signal, and we'll see that here in the next hour and a half, at 11:30, is the closing of the DAX. Why? Because the DAX here is really the strong index, and that will give you a clue. Now, the clue that the DAX gave us on Friday, quite frankly, I'll go ahead and blow this up on the screen. If you're listening in on the radio, maybe your mobile device or what have you, you can always catch an archive of this show on Channel 10. You may not have access to the DAX out there, and if you don't, and you watch Tiger TV, well, you'll see the candle formation on Friday. It was one of the few bearish candles that actually formed in all of the indexes out there. Most of the indexes either had a doji / high wave type candle. Those just simply mean the market is confused, really doesn't know which way to go. The DAX actually, with being the strongest index, gave the most bearish of signs out there. You know, if you listen to the show, how much you like, or how much I like my hammer candles when the market goes ahead and creates them. Shooting star is just the reverse. A shooting star is going to happen at highs. A hammer happens at lows out there. Really the same candle formation, just reversed. Now, has more meaning when you're testing either a support or a resistance area. In this case here, the DAX was testing the resistance area. That's this black line going across the screen. You can see that it was tested back in the October 2012 time frame. It was tested November 2012 and tested again November 30th. So November 17th and then November 30th on Friday's session out there. Now, you can see that hammer, the high of that hammer was 74.4260. Bearish, meaning when I say bearish, how about confirming a resistance area would be a close below 74.4260. That is the high of Friday's session out there, because then you've got horizontal resistance out there. You've got the bearish candle from Friday out there as well. You can also see that the DAX here, what the DAX has done or is doing, it's testing the actual swing point high from September 21st, 2012. So it does help to really understand what's going on around the markets worldwide, especially when you are out there gathering information, gathering clues as to what the markets want to do, because these markets typically will move in unison out here. So the DAX, your number on the DAX here today at the close is going to be 74.4260. Now, if it closes above that, does that mean that it's bullish? No, because it really has to break above the real resistance line. We're going to call it the swing point from September 21st. I wish I had volume. I don't have volume to give to you on that, but it doesn't set up if it closes above the shooting star. All it does is say, well, the shooting star, that candle, that one-day reversal candle, just simply doesn't have as much meaning. The more meaning anyways inside there is that horizontal resistance line. That's that black line. Now we're going to also take a look at the September 21st high, because that too is being tested out there. Let's go take a look at the ETF structures out here. Let's start off. We've got the 4 ETF structures. So let's take a look at the small caps out here, the IWM. Take a look at what the IWM is doing or trying to do. The IWM right now trading out at 82.07. That's the weak link in the chain right now. It is off 44 cents, 0.05% out there. So no great shakes yet to the downside or the top side. What the IWM first has to do, it has a little area of support. It's going to be the either November 29th low, that's $81.62, or the high from November 28th, which is $81.31. 51 million shares on that candle, 53 million shares on the low of the November 29th level. What you can see here on the IWM, you've got this gap down from October 19th. That's really the level that is holding as resistance. It has been tested only once. Looked to me like it was going to be tested here at the open. It wasn't. The high from October 19th, 82.88, 53 million shares up there. You had 39 million shares on November the 2nd. That high, 82.95. So far this morning, or today, I should say, it was able to get up to a price point of 82.76 out there. Volume-wise today, 7.3 million shares. Has not yet busted price to the downside. Right now, to a certain extent, looks like the bears are somewhat in control. If we go take a look at the 10-minute chart on the IWM, let's go ahead and do that out here. And part of what it's formed on the 10-minute chart formed a Stevie Hammer candle out here. That says the low on the IWM, which came in at 10.10, so just 4 minutes ago, is also an important low. 81.80 is the price point out there. Volume-wise, 1.8 million shares to the downside. Now, we did have the ISM manufacturing data come out. I believe that was right at about 10 o'clock. The ISM data was the lowest in 3 years out there, down at the 49.5% level. So it is a decline in manufacturing out there. So you've got some bearish news. So it'll be very important to see whether the market consumes it and chugs higher, or whether that starts to help to set up. It's always important to understand the news out there, just to watch how the market behaves, because that can give you indications whether or not there's changes in psychology. And what I mean by that is when you have bearish news out there and the market doesn't sell off and it consumes it, that is giving you important pieces of information out there. Yes, you have to become a psychiatrist of the markets out here, and candles will help you to do that as well. So you can see that the small caps here gapped up at the open, proceed to sell off. Volume-wise here, just on the 10-minute charts, moving up, gapped up and did 1.4 million shares in that first 10 minutes of trading, 1.5, the second, then 941, and then as the hammer candle, 1.8 million shares out there. Of course, that 1.8 million shares not making it all the way down to the low at 1150, which had 2.8 million shares. That low was 81.62. So far, not enough to bust it down. That is on your IWM out here. Let's go take a look at the next ETF that pops up on the screen. We'll go to the Dow Diamonds out here. The Dow Diamonds also trying to get up into an area here that has not tested. It is the open window from the November 7th high, which is at 131.05, all the way down to the low of November the 6th. That low, 131.20. The Dow Diamonds, volume-wise, though, you're taking a look at 4.4 million shares as well as 18 million shares, really, on November the 7th. On Friday, was only able to push up with 4.9 million shares, so losing energy on the way up. You've got these two little small-bodied candles out here, more like spinning tops, not really so much a doji candle out there. And what it does tell you is that the diamonds here, and even volume-wise, was telling you that it was losing its strength to the upside. Of course, you don't have a test here on the ETF structure here of swing points or of window structures. In this case here, where it would be an area of either support or resistance. This case here would be resistance. So you don't have a test in that area. You don't really have a lot of information on the ETF structure. We might on the index, but not on the ETF structure. Let's go take a look at the SPYs out here, see what the SPYs are doing. The SPYs here on Friday, testing the swing point of November 6th. That low, 142.13. You closed on Friday at 142.15. 3 pennies, and it closed with 136 million shares going into 106. What did that say? What did that suggest? It suggested that it really wanted to test the high now of that candle. That candle being November 6th, and that high being 143.52. You're having an inside day here so far, not giving you information. The low of that candle, 142.13. So far this morning, getting down to 142.15. So truly an inside day. Not a lot of information here coming from the SPY out there. Of course, we did get the information really on Friday when it closed just inside. Did it on a little bit more volume. Really suggests that it would like to go test the highs as long as it stays inside that that candle and that window is effectively closed here, so no longer really an area of resistance out here. Now what you're looking for is a rejection of the swing point, because that is a swing point out there on November 6th. You'd like to see a rejection of that on lighter volume. That would be at least a close below 142.13, and I would say you could really benchmark it off the 263 million shares, which is November 7th. What that really says, you'd like to see the SPYs close inside 141.68. That would be a true rejection of a swing point and get you back inside the range out there. If we go take a look at the 10-minute chart here on the SPYs, we forgot to do it on the diamonds out here. Let's go take a look at the SPYs. And so the SPYs, what are they doing here? During the release of the ISM data, that little flash down to the downside here, you had 9 million shares. 9 million shares really coming against, coming against right here, 16 million shares at 11.50. So we'll just simply, from a benchmarking volume standpoint here, we'll go take a look at this. And it's easier to benchmark volume this way here when it's not right at the open or at the close of a trading session. So the SPYs at 11.50 on November 29th, 16 million shares. The high there, 142.20. You can see as they came down to 142.15 and rejected that area on lighter volume, only 9 million shares. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. The Dow up 12 points right now. S&P's up 4. Composite up 14. Small caps up 80 cents right now. The NDX 100 not letting up off of the gas here. In fact, if you take a look at the NASDAQ futures, the 30-minute chart out here. In fact, if you're watching us on Tiger TV, what you do see is you see the 4 quadrants. I always start off each day at 9 o'clock, taking a look at the 4 30-minute quadrants out there of the futures contract. Right now in the upper left, you've got the NASDAQ futures. Lower left, you've got the Russell 2000. Upper right, you've got the Dow. And lower right, you've got the S&P 500. Now, what is interesting when you take a look at this here, as the Russell 2000 shows that it was the weak link out here. If we take a look at price had moved down into the level here, coming into the 10:30 session, down at the 818 level. What also was occurring at the same time was you saw on the intraday chart here was getting into an oversold condition here. It's bounced off of that area. So it's just simply the EKG. It's the breathing pattern inside these markets on an intraday basis out here. The Dow futures, though, not the Dow, the NASDAQ futures, never really pulling back that much when we take a look at the relative strength. And you can see up near, it's a session highs here on the 10:30 chart. So it's going to be the NASDAQ futures that are going to be important to be watching here, because they are the strength in the marketplace. They give it up. That means Apple, Priceline, Google, and so forth, MasterCard. But those are the 4 top dollar stocks moving to the upside out here, and it's really reflected as we take a look at the futures contract. Let's go back here to the ETFs. We'll finish that off for you. our look here at the ETFs. We were just recently looking at the SPYs. We did the, let's go take a look at the Qs. So I guess that means the Qs because we did the small caps and the diamond. So as we take a look at the Qs here, Qs will be giving you some information today, most certainly. Why? Because the Qs here closing inside the swing point of November the 6th, both on Thursday and Friday. Never touching either the high or the low. So the high and low of November 6th happens to be 66.17. That is the high out there. The low of November the 6th is 65.46. Volume-wise, your benchmark for volume, 29 million shares on that day, really also going against the 70 million shares. As it came in there on Thursday, 41 million, 41 going against 29 million. That says, okay, wants to go test the high. On Friday, 33 million going against 29 million. And it was just simply a sideways day. Again, excuse me, small-bodied candle out there, inside day. Says it was kind of a little bit lost out here. Well, not lost today because you are testing the swing point from November 6th, that high 66.17. Excuse me, traded out at 66.19. So far, 8.6 million shares out there. Let's go to Gene in Pottstown, Pennsylvania. Gene, thanks for calling. Thanks for holding.
Sure, right.
How are you today?
Oh, I'm fine.
Where's Pottstown, Pennsylvania?
40 mile west of Philadelphia.
Oh, okay, great. Are you a native of that area?
Yep.
Oh, great, great. How long have you been a listener at TFNN?
Oh, 3-4 years.
Oh, that's wonderful. Thanks so much for listening. We appreciate that. You wanted to take a look at ticker symbol GORO. Tell us what it is and what you're looking for.
Well, I'm looking to get into it.
Gold Resource Corp. Okay. And Gold Resource Corp, have you traded this one before? Stage gold and silver in?
For wheat and some of the others.
Let's go ahead and take a look at it. This thing was made a low here most recently on November the 15th, down at the $12.13. Did it with 1.4 million shares. Now, what this is doing here right now, Gene, is it's moving into the last area where it broke down, which is on October 18th. That level, the low there is 1679, the high is 1854. So let's deal with the 1679 level, 2.1 million shares there. And if we take a look at last Thursday and Friday, 139,000 shares. Wow, this is not very liquid equity out here. So on Thursday, did 139,000 shares as it was trying to come into that supply line from October day. You also got a little bit of a bearish candle out there. And on Friday, 300,000 shares. So it doesn't have the energy on the way up there. What I would do, and so what that really does is, Gene, this is setting up a little bit of a trading range at the moment. That's what it's doing on the stock chart. And the top of the trading range really looks like it's probably the 1679 area, if even that high. Gene, can you hold on through the break here?
Sure.
Okay, great. We'll be back with Gene from Pottstown, Pennsylvania. Folks, you can get in on the action at 877-927-6648. Dow is up 8 cents right now. We'll be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes here. We are on the line with Gene from Pottstown, Pennsylvania, taking a look at Gold Resource Corp. Gene, are you watching us on Tiger TV by any chance?
Yes, I am.
Okay, perfect. So, during the break here, I just drew a couple of lines that you should be focused on and paying attention to, and those are the areas where we've got really volume to the downside. So you'd be looking at the day of July 20th and the following trading session on the 23rd out there. On the 20th, this thing moves down with 3.8 million shares. On the next day, 1.4 million shares. If you use the low of July 23rd, that's 1654, it really becomes another area of resistance for you. You know, the equity, it did what it was really supposed to do to a certain extent. On that July 20th day, when it moved down with 3.8 million shares, it went back up and it tested that area, it was a little bit of a bull run up here, but it got up with 852,000 shares going against 3.8 million shares. Did that on September the 21st, and then it went and gave it up and moved down. And when it did, it also yet another high volume down day, which was on October the 18th. So what that's really telling you is it has a lot of work, a lot of repair work that it has to do in order for this thing to move higher. So that being said, what you really want to see is you want to see some kind of sign of strength as this thing comes off at the bottom. And you didn't really see that because as this equity here moved lower on the day of November 14th, it was 1.2 million shares to the downside. But then now you've got this little high volume blowout here with 1.4 million shares on November 15th, which has not been tested. I suspect that this equity here, Gene, will move on down and test that level which is going to be $13.71. And if it does, that doesn't necessarily set up a buy for you. You want to see some big volume come into it. You'd like to see wide price spread. You would like to see accelerated volume. And then you'd like to see it come back and maybe test that area one more time, wherever you get that wide price spread and accelerated volume. The other thing that I've done with this stock chart here, it's always good to take a look at it in multiple time frames. And so if I put this on a monthly time frame, that's probably the best one to look at. I would point you to the month of June 30th, 2011. That's your highest volume bar out there, 12 million shares, and that was volume off of the top. And whenever you see volume off of the top, that is giving you a real warning sign out there. You know, you've got real institutional selling. Instead, what I would do is I would direct you maybe to a stock chart like Great Panther Silver. Have you ever traded Great Panther Silver?
Yes, I have.
Okay, so I'm going to show you just the opposite now, something that you'd really like to look for. Now, it's got some damage done as well, but if you take a look at Great Panther Silver, and I'm putting that up here on Tiger TV, we're going to look on the monthly chart. We're looking for that same high volume bar. We'll go look at March 31st, 2011, and what you'll see is that is a high volume bar. Wide price spread there, most certainly, $3.55 to $5.04 out there. But that has volume at the highs. At some point in time, price will make its way back up there. So that's what you're, so on the monthly chart, that's what you're looking for. On Great Panther Silver, we take a look at the daily chart out here. The daily chart shows that what it's doing today, it's testing a swing point low from the level of November the 16th out there. That has 703,000 shares. It was tested on November 28th with 379, so that was 379 going to get 703. That was not a bad test. Testing it again today, so far 97,000 shares. Looks like another 300,000 share day here. So maybe forming a little bit of a bottom. But what this does, also, if you take a look at this stock chart here, instead of having so many volume bars to the downside where it was breaking down, this also has on the daily chart, if you take a look at September 13th, a high volume high out there, very close to a high volume high out there, 2 million shares to the upside, and no real volume off of the top. In fact, the following trading session made the high with 1.6 million shares out there. So this is really a better setup for you, in my opinion, and would be better to take a stab at this one, quite frankly, as it tests the lows here, the November 16th level. So if you're looking, at maybe a silver mining stock or something, the technicals on this equity are much better than on Gold Resource Corp. Does that help? Or? Yeah,
that helps me. Yeah, I just was looking at, I saw the PE on that Gold Resource, and it pays a nice dividend.
Ah, okay. Well, I guess it's going to need to in order to be able to keep people in the equity out there, because it really is struggling out there. And I just haven't seen any signs of strength to say that you should put your money at risk. I'd rather you be careful about your capital than the actual dividend.
How about OSUR?
OSUR. Okay, let's go take a look at it for you. OSUR. And, folks, OSUR, let me see what that is. OSUR is OraSure Technologies. They develop, manufacture, market, and sell fluid diagnostic product specimen collection devices in the continental United States. Looks like internationally as well. Okay, so now we've got a high volume low out here. So let's go take a look at this equity, trading out at $7.61. So let's take a look. So this low was actually tested with light volume. So the low we're taking a look at here, Gene, is from November 8th, $6.79, 4.4 million shares. Now here was a successful test of a low on lighter volume. So 497,000 shares testing 4.4 million shares. That's actually a pretty nice test out here. Problem is, no sign of strength yet. And what you really want to see is you want to see some real volume here. Or if you're going to go ahead and take a stab at this equity, do it at about the $6.70, let's say $6.79 might be the place for you to take a stab at this thing. Let's put this on a weekly chart. You haven't seen the sign of strength out there, and one should show up, and that's when you want to, take a look at trading this equity here on the weekly chart. I don't, the weekly chart, okay, in the weekly chart, not too bad. Remember we were talking about high volume highs out there? Well, if you take a look at the weekly chart on this, the week of July 13th, 10.5 million shares to the upside. The prior week had 9.7 million shares. So this year looks, the trade setup with having volume up at the highs, not bad at all. It's trading inside, let's see here. No, it's not trading inside that swing point. I was going all the way back to August 26, 2011. Let's put this on a monthly, see if we've got volume at the high on this as well. And you've got volume off the top, unfortunately. That goes all the way back to 2005. So that's where you're kind of struggling here right now. It's a supply line, believe it or not, 2005. You do have some pretty decent volume here on July 31st, 2012. And that was anywhere from a range of 1044 to 1401. I say on this equity here, it has tested a low volume area on lighter volume, a high volume area on lighter volume. I would wait for a sign of strength here.
Okay.
Wait for a sign of strength, and you'll see it. Watch your stock chart. You will see it. You'll see wide price spread and accelerated volume, and then you want to draft. Just like car racing, you want to draft behind. That fund out there that's buying. Okay.
Okay. Thank you.
Hey, you bet. Thanks for calling.
Right.
All righty. So as we come back to the markets here, the Dow's off 10 points right now. Let's go take a look at, see here, what's moving to the downside. You've got, that we haven't done. Let's go take a look at the 3D printer company. Stratasys Limited, SSYS, is the ticker symbol out here. You have both Stratasys and 3D Technologies, I think it is, DDD, is the ticker symbol. Both strong stocks, now starting to pull back a bit. And let's see what the volume looks like on these equities. I don't have that on my screen. SSYS. So let's go take a look at it. And this thing here making some bearish candles coming off of the highs. That says that it's trading out at 72.29 right now. This is going to pull back to the September 18th high volume bar, 4.6 million shares. So 63.59 is likely its next stop. Could be as low as 58.41. It's trading at 72.29 right now. Let's take a look at this. Is a daily chart. So the last time that this thing broke out happened to be November 26th, 2012, so just a few days ago. And the low there is 71.14. That's where you'll get a piece of information from. 1.3 million shares. Only been trading here for a little over an hour and 15 minutes. 195,000 shares. 195 going against 1.3 million. So the good news here is that it doesn't have enough volume necessarily to break down its last sign of strength. But if this does close below 71.14, I think it wants to come out here and test this September 18th level again. That was 58.41 to 63.59. So far, not a damaged stock, just a orderly pullback out here. Just looking for any other spots on this equity. That's really it for Stratasys out there. Let's go take a look at IBM. I was looking at IBM, I think, before the show started or during one of the breaks out here. So let's pull up IBM. First, we'll pull up the daily chart. IBM trading down at the 189.05 level. Nothing great with regard to volume here. To the downside today, it's done 956,000 shares. Now, wide open on IBM is another test of an area of support. And that gets back to a sign of strength out here that takes you into January 19th, 2012. January 19th, really I should say January 20th, 2012, IBM gaps up, and it does it with 12 million shares out there. You can see the low, which was the 19th, and that had 8.5 million shares. As IBM pulled back and tested that area, it did it on the 12th of July. 4.9 million shares. Did not have the volume to bust it down. And it came down and it tested that open window. That window is still open. That window, meaning when I say still open, that still is a valid support area on IBM. Hasn't been able to make it all the way down there. That's the area where you're going to get your next real release of information. If IBM is coming down there, certainly on more than 12 million shares, that says, okay, it's going to go repair that window, or should repair that window. That would then eliminate that as an area of support. However, if it comes down there and test it as it did back in July of 2012, it'll really be setting up a consolidation, and one heck of a nice consolidation from the 180 level into maybe the 210 level out there. Now, that's on the daily chart. The importance of taking a look at a daily, a weekly, and a monthly is to get other pictures on other time frames. Why? Because weekly has got more meaning than a daily, and monthly more than a weekly. And if we take a look at the weekly chart here, what you're going to see in IBM, you're going to see a rising price trend channel. That's a rising channel going all the way back into the 2009 time frame. Now, a rising channel different than a trend line, because what you're looking for is a number of co-located opens and closes, and you want to have more than 3, and we certainly have that on this weekly chart of IBM. What you can see IBM did on the week of the 9th of November with 17 million shares to the downside, and then 19 million shares the following week. It broke through that channel line, went back up and tested it almost immediately. The week of November 23rd out there, couldn't get back inside, rejected that area. Last week, still trading a little bit lower here. So this could be a real break of that rising price channel out there. That, folks, would be very bearish because of the weighting structure inside the Dow out there with IBM. Now, that's the weekly. Now, let's go see what the monthly chart shows us with IBM. What the monthly chart shows us is a even more bearish picture, quite frankly. IBM formed a single-month bearish engulfing candle the month of October 2012. You had follow-through last month out there. If we take a look at the IBM chart, and if you take a look at the monthly charts out here, you know, you did see a bearish engulfing candle that took place on January 31st, 2010. That area was rejected. That bearish engulfing was rejected the following month, and IBM just simply moved sideways, consolidated sideways before making its next move up off of the August lows out there. And then you don't really see any. You see this one potential bearish engulfing candle on August, the week of August in 2011, a month of August 2011. Gets reversed the following trading session out here. This time around, though, we haven't seen a rejection at all. So, what does that mean? It means go back and take a look at other bearish engulfing candles. Now, I can stitch a few together, but here's one that shows up, which is in 2002. January 31st, 2002, you get a follow-through on the following month, and IBM moved down to lower price, came all the way back into the time frame of 1998 out here. So IBM is suggesting to me that it wants to come down and test the August 2011 area in the 157. Now, that's just simply taking a look at the last time we saw some volume out here. That is the August 31st, 2011 time frame, 195 million shares. If we just simply take a look at retracements, and let's do that, retracements from the low to the high out here. In the low we're taking a look at goes all the way back into the November 30th, 2008 time frame, coming back and testing that high volume bar from August 31st. The low there is actually 157.13. At 157.44, only a 0.382 retracement. If that's all IBM does is come back there, and then you see a sign of strength, that's a very bullish looking chart out there. But right now, IBM wants lower price. 877-927-6648. Dow off 7 points. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. As we come back, the Dow off 30 points right now. S&P off 1. Small caps down 70 cents. Composite, the only thing that is green out there. Priceline still up $14. Apple up $2.50. Let me give you the real trade setup here and outlook for the day for you to be paying attention to. As you know, we were taking a look at the DAX. So let's first go over to Germany here and see what it is that we have to say. Coming in at 11:30, what we're getting right now is a real rejection here of a resistance area as well as a reversal signal, the reversal signal that we got on Friday out here. Now, which there still is 36 minutes left in the trading session. However, it is giving you plenty of information here right now. And that is this. Number one, we had the shooting star candle. That is the opposite of Stevie's hammer candles, which occur at the bottom. Shooting star occurs at the top and has more meaning, way more meaning when you're coming up against a resistance area. We know this black line, this horizontal level coming across the screen here, that is a resistance area. It has been tested, excuse me, multiple times. Now what we're seeing, it was tested on Friday, being tested again today. Only today, quite frankly, instead of just testing the resistance area, what it has done is tested the swing point high from September 21st out there, that level 74.7853. Tom, when he does the show from 4 to 6, he'll be able to give you the volume there. When we came on, what I said is a real rejection of this area would be getting back inside the range here, and really getting back inside the range by getting back inside the high on Friday in the DAX. That was 74.4260 or 74.3280. So 24 minutes from now, when Basil is doing his show, I would, if you call in the Basil show, I believe he can pull the DAX up, and you might want to pay attention to it, or you can follow it yourself. It's pretty simple. Even if you don't get the chart of the data feed, you can find it on the internet for sure. So your price point there, the most bearish, I'll call it, or certainly a rejection, would be getting back inside of Friday's high. That is 74.4260. At this stage, it doesn't really have to necessarily do that, but that would be the more bearish of the scenarios out there, because now you would also be just simply testing the upper shadow of the candle from Friday. Now, that upper shadow, it's very important, folks, because who's in control? Even though you got a higher price here, who is really in control of the DAX during the session here? The bulls or the bears when you look at that candle? Who's in control? That's right. So you're now seeing a change in psychology. It's the bears who were in control here, and you're seeing a change in psychology against an area that has been resistance. Wait for the close. It becomes real simple here before you put on your trade. What else are we getting? Well, it's a currency marketplace. Right now, as we take a look at the King, you got King dollar back 31 ticks right now. Well, that's primarily about the euro. So if we go take a look at the euro, you can see the euro is strong. It's up at the 1.30676. Of course, if you take a look at the relative strength indicator out here, you can see the euro moving up towards that overbought condition. What has the euro done? Just taking a look at patterns the last few times that it's been up here. Well, last few times it's been up in that high relative strength indicator, up above 70 or 70, not even close to 70. What has happened is the euro has backed off. Now, it got into real oversold condition as it was doing that little rubber band expansion here, that 1.618 butterfly, as it was completing that in the September 17th, 16th area as well. So you want to go ahead and try to benchmark both of these things together here. But the euro is getting pretty close to wanting to back off as well out there. So that is really the setup out there. I know you can take a look at Apple as well to see what Apple gives you as far as information. But pay attention to the DAX, pay attention to the euro, and pay attention to TFNN. It's been great to be with you. Stay tuned for Basil Chapman, then Larry Pesavento, Daryl Martin, David White, Ken Shreve, and the Tom O'Brien Show from 4 to 6. Have a great Monday, folks. Look forward to seeing you tomorrow. Bye-bye.